Okay, in this video, episode 2 of Learning to Read Charts, the second thing we're going to go over is measuring extension and what that means and why it's important. So, in the first video, if you have not watched that, check that one out. But in the first video, you learned how to identify the current trend by looking at the MACD on the monthly time frame. You go down to the MACD, white line crosses over the yellow line means you're in a bull run. White line crossed under the yellow line means you're in a bear market. So right now we are in a bull run on Nvidia, but the most important thing now to follow after you have this data here, okay, we know we're in a bull run. Now let's go to the daily time frame. And again, these episodes are going to build up on one another. So if you skipped episode 1, you got to go back to episode 1 or all of this is going to go way over your head. So episode 1, you learn to identify the status of the stock. Bull run or bear market? What's it? Where is it at? Now you go to the daily time frame, and I want you to go to indicators. I want you to type in weighted moving average because I'm talking real slow because I'm assuming you're a beginner. Okay, add that to your chart, and then click on settings. Hover over it, click on settings, change that line to purple. Parameter, change it to 200. Confirm. Now you have the exact same setup as I do. Okay, so now you have a purple line. Don't worry about what it does. It doesn't matter. You don't care about what it does. You just care that it's purple and it's on your chart. Okay, and you're on the daily time frame. Now I want you to go to draw here, and grab this tool, the price range tool here. And now the most important thing you're going to do is measure how far extended the stock price is from the purple line. So you do that by going to the end of the purple line right here. That's the end of it, right? And you measure, you click and drag and measure all the way to the current price. And you can see that the stock is extended above that purple line 20%. What does that mean? It means that you are paying 20% extra premium to own the stock. You're paying it even gives you the dollar value. You're paying $31 more to own the stock. This purple line, I want you to think that as the average. That's the average. You don't want to buy something when it's expensive, right? Maybe you do. I don't like buying things when they're expensive. I don't like paying 20% more for my pizzas, for my groceries. If Amazon said you got to pay 20% more tomorrow for your groceries, a lot of people would be very upset. I'm telling you right now, they would be very upset. I would be upset if my cereal suddenly started costing 20% more. If my chocolate milk, my almond milk, chocolate milk, whatever, started costing 20% more, I'd be pretty pissed. So you want to go into the markets and enter when you're at minimum paying the average. You want to be paying the average. You never want to be the one buying up here because you never know when you're buying the top. So it's very important to always measure how extended you are from that average. And you are $31 extended. That means that you're paying quite a bit more to own the stock. If you are patient and disciplined, you can wait for this to come down. It always comes back down to the average. You'll see right here. I'll zoom out on the chart. What does it do here? Comes back down to it. Comes back down to it. Comes back down to it. Goes under it. But we're not going to talk about that just yet. We're just focused on measuring how far extended we are. We're not going to get too crazy here. I don't want to inundate you with too much information. I'm assuming you're a beginner learning. All you need to know is purple line. I want you to grab your whiteboard or whatever tool you have, paper, pen, whatever. Write down daily time frame, purple line, 200 WMA, turn it purple, click confirm, and grab your date tool here, and not your date tool, your price range tool. Click and drag from the purple line, the end of it, to where the current price is. That's going to tell you how much more you're paying to own the stock, how extended you are from the average. And with this information, like, hey, if I wait, I know it's going to come back to that purple line at some point, right? It always comes back. It always comes back. It always comes back. And sometimes underneath it, we're not going to talk about that just yet. It always comes back to the purple, always comes back. It always, forever has always done this. Any stock. This isn't just exclusive to NVIDIA. A lot of stocks have this pattern. So when you are paying for a stock at the purple line, you are buying at the average, and you are getting a discount from highs, which you can even measure. You can grab that same tool and drag from the top down to the purple line. If you wait for that purple line, you get a 20% discount. And that's what we're about on this channel. That's what we're about in the Discord. That's what we're about. We're about buying discounts. So now, because of this video, you know, you can measure, you know how to measure how much of a discount you're getting if you wait for that purple line. You also learn that that purple line is your average, and that's where you want to buy. You also learn that you can measure how extended you are above the purple line. The more extended you are, the higher the chance that it's going to drop quite a lot. And you don't want to be buying the stock at a high, and then it drops 20 to 40% on you. Because this is NVIDIA. We can even do this with other stocks. We can do this with RGTI. There's a girl who was in my Discord. I gave her the boot because she didn't listen to me, because she was being dumb. I told her, like, don't you throw 600K. I trade with 600K too, but I don't go crazy like she does. She bought 600K, all of her account right up here, and boom, right? It dropped like 50% overnight. Guess what happened? She took a huge loss. I gave her the boot from the Discord. She threatened to sue me, but I don't care. Here's the boot, right? Here's the, boot. Here's another boot. Why not? To add insult to injury, here's a third boot. But this is why you don't lump sum and go crazy like this. And then she lost another like 30% on SoundHound, if I recall. So that was she's just gambling. That's what that is. A lot of gamblers who aren't consistent with their profits because they gamble. If you were consistent with your profits, it's not gambling anymore because you actually got strategy. I've noticed too many people coming back to my Discord who used to be in the Discord at the beginning of the year, and they all have pretty much the same story. They left my Discord to go gamble. That's really what they did. Because they'd rather, risk it for the biscuit than just take the consistent profit that adds up over time, which is what I do. So you can measure here the purple line, right? Look at how extended this price was when she bought 600K worth of this here. Wow. She was paying $60 premium from the purple line, which was sitting at $349. She was paying 548% more to own shares of this stock at that point in time. And then what happened? Well, the more extended it is percentage-wise, the bigger the drop's going to be. And guess what happened? When it came back to that purple line, and you know how to measure this, right? Measure from the top to where it finally touched the purple line all the way over here. Oops. Let's zoom out. Where did it touch it? It touched it right here. It dropped a whole 65%. And the people who bought, we were alerting this one under 10 anyways, but the people who bought down here at the purple line, guess what? Guess what? They bought it cheap. They bought it at the average. They didn't pay 500%, on top. And they didn't hold the bag all the way down. They did not get their accounts destroyed. And then guess what? It went from that purple line all the way to 51 for a nice 600% move. And they made money. Because I have a lot of people who've reached out to me and told me I made a lot of money holding APOD, RGTI, etc. And that's it for the video. That's the point of going to the daily time frame and measuring extension, measuring how far extended you are above the purple line, and how far it can drop from highs to the purple line. And you can measure that and figure out like how much of a discount you're going to get once it comes back to the purple line. You also learn that some stocks are so volatile that when they do come to the purple line, they can move 600% clearly, as you just saw with RGTI. So what are you going to do? Your strategy is going to be, I'm just going to wait for the purple line, because for some reason this one loves moving hundreds of percentages once it touches that purple line and runs. So you can learn a lot just off of measuring with these tools that I just gave you. All you need is a purple line, daily time frame, and that measuring tool that's up there. That's it. And measure from highs to purple line to highs, purple line to current price. Rinse and repeat. Go while you're taking a shit. Go fucking get on the charts and practice. A lot of people don't want to practice. You got to practice, 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 practice. I'm teaching myself chess right now. Because every year I like to get into the top 10% of anything, any hobby or whatever. So in order to do that, how do you get into the top 10% of anything? You got to put in the work. You got to sit there and sometimes practice the same drills over and over and over and over until it's just second nature. Second nature. I can look at Rich Tech Robotics real quick. Where's Rich Tech? Oops, I can go like this. Okay, I don't even need to measure this. I know this is extended about 300% from the purple line. Let's measure it. Yep, it's 264%. Well, I rounded up, I guess. But you get the point. I could just look at it and know already. Yeah. This is way too extended. And if it drops to the purple line at around, what, 250? Yeah, I figured. 63% discount. Woo, that's what I'm going to wait for. I'm going to wait for that discount. Well, I'm doing a 1 share a day challenge. That's a whole nother thing. That's just a discipline. That's a discipline psychological thing. It's not really focused on, that's a whole nother thing. If you're in the Discord, you know what I'm talking about. Don't worry about that. Focus on this. The point is, you can measure extension, know how far extended you are, and you know where to buy, and you can measure how much of a discount you're getting, and you can even measure how much you can make in the future once RR comes back to that purple line at around 250. Which, by the way, if you're doing the 1 a day challenge, when RR comes to that purple line, I will add heavy. That's the only time you want to add heavy. Too many people, they want to buy their calls, short-term dated calls. They want to leverage loans and margin and all this other garbage when we're like 264% extended. That doesn't make sense. If you're gonna borrow money, if you're gonna take a loan out, if you're gonna margin, whatever, if you're gonna buy calls, whatever kind of leverage you're gonna use, at least do it when you're at the purple line, when you know you're paying, the average, and not paying a huge 300, 600, 180% premium. All right, guys, that's it for this lesson of episode 2 of reading the charts. I know some of you are like, man, I'm not. I know. We're gonna get into learning how to read the candles, but if you've watched my videos, I kind of don't really talk about candles. I kind of just look at where's purple line, where are the chart patterns, and where are the targets. That's pretty much it. I don't really even. You don't even need to learn how to read candles. You can literally just have a line, and that's it. You don't give a damn about anything other than purple line relative to price, literally. But we'll get more deep into all that later on. I just want to start with the easier stuff, which this video wasn't supposed to be 12 minutes, but goddamn. All right, guys, I'll see you in episode 3.